Imagine this. It's the late 1990s. You find something you want to buy online. But then comes the scary part. Typing your credit card number into a website you barely trust. There's no buyer protection, no instant refunds, no digital wallets. Most people just close the browser window. E-commerce existed, but payments were fundamentally broken. And that's where PayPal's story begins. At the time, online payments had 4 huge problems. First, trust. Customers didn't trust random merchants with their financial information. Second, complexity. Small sellers and individuals couldn't easily accept credit card payments. Third, speed. Bank transfers took days to clear. And finally, borders. Sending money internationally was a painful, expensive process. The big banks were focused on their physical branches. The card networks were focused on large, established merchants. Nobody was focused on the everyday person trying to buy or sell something online. This massive gap in the market created one of the biggest opportunities in financial technology history. The story starts in 1998 with a small startup called Confinity. It was founded by Max Levchin, a cryptography expert, and Peter Thiel, a brilliant business strategist. But their initial obsession wasn't payments. It was creating secure, digital money that could be beamed between Palm Pilots. At the very same time, another startup called XCOM existed, founded by none other than Elon Musk. His vision was even grander, to build a full-service online bank. These two companies were competitors, but they soon realized they were circling the same problem from different angles. In 2000, they merged. And out of that high-stakes merger came one simple, revolutionary idea that mattered more than anything else. What if sending money was as easy as sending an email? That single idea became PayPal. PayPal's first innovation was deceptively simple. You didn't need a special merchant account from a bank. You didn't need to visit a branch. You didn't need to share your card details with every single seller. All you needed was an email address and a password. PayPal positioned itself as the trusted middleman. Customers felt safer giving their information to PayPal than to a random website. Sellers trusted PayPal to handle the risk and the processing. This single idea completely removed the fear from online payments for millions of people. It was a game changer. Then, something unexpected and magical happened. On the auction site eBay, sellers started adding a little line to their listings. PayPal accepted. Buyers, who were already nervous about sending money to strangers, flocked to those listings. Sellers who used PayPal found that their items sold faster and for higher prices. PayPal didn't need a massive advertising budget. It spread like wildfire, virally, through the eBay ecosystem. It became a mark of trust. By 2002, the growth was explosive. Over 70% of all transactions on eBay were being settled through PayPal. eBay's management realized they had no choice. They acquired PayPal for a stunning $1.5 billion. This moment changed everything. It made PayPal legitimate, global, and practically unstoppable. Let's pause for a second and really understand what PayPal changed about the structure of payments. Before PayPal, the process was complicated. A customer's payment had to go from them to the merchant's bank, to the card network, and finally to the customer's bank. It was complex, slow, and risky for everyone involved. After PayPal, the model was beautifully simple. Customer to PayPal, wallet to merchant. That's it. PayPal absorbed all the complexity in the middle. It managed the fraud risk. It established trust. It handled currency conversion for international sales. It mediated disputes and it sped up the settlement process. PayPal didn't replace banks, not directly. It built a powerful, user-friendly layer on top of the existing financial system. It restructured payments into a platform model, and the world has never been the same. PayPal won because it was absolutely obsessed with the customer experience for both buyers and sellers. For customers, the benefits were obvious. You no longer had to share your card details everywhere. You could check out with just one click. You got buyer protection if something went wrong, and getting a refund was suddenly easy. For sellers, it was a revolution. They could get set up instantly without any paperwork. They could suddenly sell to a global customer base. They were protected from most types of fraud. And most importantly, they got their cash faster. PayPal made people feel safe spending money online. And when people feel safe, they spend more. That simple principle fueled the first wave of e-commerce growth. But PayPal wasn't just a pretty interface and a digital wallet. Behind the scenes, it was a sophisticated risk engine. The technology that powered it was groundbreaking. It used some of the earliest forms of large-scale fraud detection algorithms, behavioral analytics to see if a user was acting suspiciously, and machine learning to give every single transaction a real-time risk score. As a payment was happening, PayPal's systems were asking, is this a normal purchase for this user? Is the location suspicious? Does this transaction look risky? Should we block it? It became one of the world's largest and most effective real-time fraud prevention platforms. This incredible capability to manage risk at scale later inspired the next generation of fintech giants, like Stripe, Adyen, and Square. Of course, PayPal's journey wasn't perfect. It faced major challenges along the way. In the early years, it was a constant battle against sophisticated fraud rings. As it grew, it faced immense pressure from regulators around the world who didn't know what to make of this new kind of money company. And many users became frustrated when their accounts were frozen due to the aggressive fraud filters. Competition also emerged from banks and big tech companies who finally woke up to the threat. But PayPal had one massive, unstoppable advantage: network effects. The more users that joined, the more merchants wanted to accept it. And the more merchants that accepted it, the more essential it became for users. That powerful flywheel was incredibly difficult for any competitor to stop. The true impact of PayPal goes beyond just buying things online. It unlocked entirely new use cases that changed the world. Think about online marketplaces like eBay and Etsy, the entire freelancing and gig economy on platforms like Fiverr and Upwork. The ability for small businesses to export digital goods, the subscription economy for software and media, and frictionless cross-border commerce. None of these business models could have scaled to the size they are today without a simple, trusted payment solution like PayPal. PayPal didn't just enable payments. It enabled entirely new ways of doing business on the internet. And the story doesn't end there. PayPal didn't just create a company. It created a generation of leaders. The group of early employees and founders, famously known as the PayPal Mafia, went on to build some of the most influential companies of our time. Elon Musk founded Tesla and SpaceX. Reid Hoffman founded LinkedIn. Peter Thiel founded Palantir. Max Levchin founded Affirm. This incredible group carried PayPal's DNA with them, a focus on platform thinking, a deep understanding of risk-based finance, and a belief in API-driven systems. You could argue that the entire modern fintech industry was born from the lessons learned inside PayPal. So why does PayPal still matter so much today? It normalized the ideas that we now take for granted. It created trust in online payments when there was none. It popularized the concept of the digital wallet. It proved the power of platform finance. Without PayPal, e-commerce would have grown much slower. The fintech landscape would look completely different. And the digital trust that underpins our online lives would have taken far longer to build. PayPal didn't just move money. It restructured how the entire world thinks about paying for things online. If you enjoyed this story, make sure to like the video and subscribe for more deep dives into the companies that shape our world. Let me know in the comments which company you want to see covered next. On the next episode, we'll explore Stripe and how a few lines of code help developers take over the world of finance. Thanks for watching.